And we're coming back from a long hiatus here. Last week, we actually I flew out to San Francisco to go to the Lendit FinTech Conference, and I was over at WanChain's booth working with them, helping people kind of understand what's going on with blockchain and what's going on with WanChain more specifically. And so because of that trip, we shortened the newsletters. We had a quick edition on Monday and find another recap on Friday just to kind of wrap up and explain what we were seeing at the conference, what was going on there. But getting into the swing of things again today, just for context, it's super rainy over here, pretty heavy downpour, so hopefully April showers brings May flowers, and on top of that, maybe it'll bring a bull market too. And whether or not that joke landed, we're going to roll into everything. And again, just another disclaimer, this isn't financial advice, this is just me writing the paper, talking about the paper, talking about everything that went on for the day and anything that I'm finding relevant. Today is just really reviewing, again, what I think is happening with the market. So again, if you're looking for investment advice, seek it elsewhere, not here. And again, if you want to subscribe to the newsletter, check out the dailybit.news. Follow us on our social channels. We put up our blog posts on Medium. Follow LinkedIn, Twitter, Facebook, any other channel out there if you want to get more involved. By all means, take a look over there. So for our table of contents today, starting off again, word on the street. Number one, Battle of the Bulls. We're going to be looking at a couple variables or factors going on in the market that could indicate there might be some sign of a reversal. But again, we'll go into that and kind of see what we're talking about there. For Where's Blockchain, we're looking at hotel booking rooms at hotels on vacations and how that can be streamlined with blockchain technology. For Bulls and Bears, we're looking at Börse, a German company, and Barclays. Both of them are getting involved into the crypto space. We're going to see what's going on with that specifically. And for our Bears, we're looking at Verge again. Some people are saying that it's kind of looking to be BitConnect 2.0. So again, we're going to dive into the details, see what's going on there. And for education, continuing along with these consensus mechanisms that we've been talking about, and we're going to look at proof of authority today. So again, starting off with tweet of the day, this is coming from Bruce Fenton, and Bruce says, "My friend just asked me some advantages of tokenized securities. Right now it takes 3 weeks to transfer stock between brokers. With a token it will take 10 minutes. So again, if you're looking for reasons why there's going to be, at least a lot of experts think and a lot of people involved in the space, think that there's going to be this transition from IPO issuances to ICO issuances. That's one of the examples right there that's pretty clear. The fact that you can go through the entire process very quickly, and on top of that, if we want to touch on some other points, it's a global issuance. There's much more liquidity available to these investors that want to get involved in the market. So again, it's a global issuance. It's immutable transfers of ownership from one individual to the other. And again, it's cheaper, it's safer, it's more secure. So there's a lot of advantages with tokenized securities. So again, whether or not that's going to happen, we'll see. But I personally, in my opinion, I do think that we're going to see a transition here from IPO issuances to these ICOs where everything is backed on the blockchain. So again, for word on the street, we're looking at Battle of the Bulls, and first off, we should start with market cap here and just look at what was really going on last week. So around April 10th, April 11th, the market cap was hovering just above 250 billion, but now it's closer to 325 billion. So again, there's not $75 billion has entered the market, but maybe 65 billion has entered the market. So again, when we're thinking about what's going on here, like what is fueling this run, it could be another bounce, but there could be more fundamentals at play. And when we're looking into the weeds and digging into the weeds, seeing what's really going on here behind the scenes of this price movement, there really does seem to be some of these fundamental variables kind of taking shape. And again, just taking a look at this. Number one, the shorts were at an all-time high about this time last week. We can look at TradingView, and you can put up a indicator that shows the number of BTC shorts compared to USD. And this is coming from Catalan DV, but again, we can see that the shorts for Bitcoin were at an all-time high, and then when that condition is available, that sets the stage for what's known as a short squeeze. So by Investopedia's definition, a short squeeze is a situation in which a heavily shorted stock or commodity moves sharply higher, forcing more short sellers to close out their short positions and add into the upward pressure on the stock. So again, when you think about this, the demand side of the order book is much, much thicker than the sell side, and because of that, or the supply side, and because of that, all these shorts, all these people that wanted to put shorts in on Bitcoin, they're quickly losing money, they're quickly going underwater as the price of Bitcoin shoots up. So again, if they're thinking that they want to close their position and then hedge in the opposite direction and take a long, that's where you're going to see a lot of these shorts close, and then because of that, once again, the demand goes higher up. So again, that's actually something we did see. In the beginning of the week, there was, I believe, $30 billion injected into the market in the span of an hour. So again, just looking into that, that's definitely one of the factors that contributed to the uptick in Bitcoin's price. But again, there's a couple things going on. You can't really narrow it down to one aspect. Definitely vary in degrees, and in terms of, I guess, like 100% cause, I'd say maybe the short selling was higher, but again, we don't really know. Another potential item that was taking shape here, and I do agree with this as well, is tax season. Tomorrow, April 17th, is the last day that you can pay your taxes for cryptocurrencies, and Tom Lee of Fundstrat he predicted that Americans will owe roughly $25 billion in capital gains taxes for their cryptocurrency holdings. So again, if you're a retail investor that got involved in the market in 2017, odds are you weren't really thinking about an exit strategy for your tax season in 2018. I mean, this is something that a lot of people were kind of looking at, saying, oh, like, I don't have to pay taxes, like taxes are really just like a demon, like don't have to worry about it, it's never going to happen. But again, when these people are making these outrageous gains, you're seeing these folks on Reddit that have $60,000 in taxes they have to pay, $50,000 in taxes, because they didn't understand that by selling out of Bitcoin into another cryptocurrency, or selling and locking in profits in USD means that you have to realize those gains for during April 2018 when you're filing your taxes. So again, all these people that made these $100,000 in returns in 2017 sold before the end of December 2017, and then saw those gains fall in this bear market that we've been experiencing the past 3 months, are really stuck between a rock and a hard place with tax season. And again, the fact that if we're kind of thinking that a lot of retail investors were in the same place where they weren't really expecting to have to sell out as the downward pressure on the market continued, then the fact that people were liquidating their positions does make sense and does kind of contribute to this downtrend that we're seeing. And also, looking historically, in the 2014 bear market, just around April 14th, we saw that the downtrend line was broken, and of course that led to a dead cat bounce, which in trading terms, a dead cat bounce is an initial uptick or a temporary uptick, but again, it's really a bull trap. Investors and traders they buy in, they think that this is a full reversal, that everything's going to go bullish again, the prices are going to start rising, the market cap's going to shoot up. But again, it's a fake out, and ultimately there was a bear market, a continued bear market for a couple more months after that, until about January 2015. So again, this could happen right now. We're just about in mid-April right now, so whether we break that downtrend line, who knows, but if we do see a break of the trend line, it's just looking at historical performance, there could be an uptick, but again, there could be a continued downtrend afterwards. So again, this is really all speculation right now. It's just looking at historical price and helping to kind of shape an opinion and understand what could potentially happen in the future, so you can better plan for potential entry or exit into the market at whatever time you think is appropriate. So, additionally, Tim Draper. So, Tim is best known for, well, a lot of folks may not know, but Tim is actually the guy who bought all of the Bitcoins sold by the FBI that were acquired during the Silk Road heist. So, Tim bought, I believe it's 30,000 or so Bitcoins at maybe $600 each during that auction period of Silk Road. And right now, he came out the other day, and he's putting his 2022 prediction for Bitcoin at $250,000, and that seems like a crazy estimate. I know John McAfee is predicting around $1 million for, I believe, 2022 as well. But the reason that Tim is thinking that, look, Bitcoin is going to go to this level is because, number one, he thinks that there's a huge need for a global reserve currency and a global currency. The current market for circulating fiat is, in Tim's mind and Tim's perspective, capped at over $100 trillion. So again, looking at that and thinking that right now the market cap for Bitcoin is $100 billion. If we can get 1% of that $100 trillion market, that's nearly a 10 times increase, or a 10x increase in the market cap for BTC. And even when the market cap for the entire industry was around 830 billion when it peaked in mid-January, Bitcoin's market cap was still probably maybe 300, 400 billion at that. And it hit 20K by then. So again, we're going to probably need a lot more than 300, 400 billion, or even a trillion to get to 250K, but Tim is very confident that we are going to get there because of not only the fact that there is this need for this global reserve currency, but because Bitcoin is able to revolutionize so many industries, from healthcare and financial services. Those are two verticals where there really are a lot of inefficiencies and a lot of potential for these monetary transactions going on in the system. But on top of that, there's so many more industries that Bitcoin can disrupt and improve upon the current monetary system and the payment systems that we have with SWIFT and other payment rails. On top of that, Pantera Capital, another cryptocurrency kind of hedge fund figure, they, just for context too, for their backdrop, Pantera's only made 4 recommendations in the past 7 years on Bitcoin. 3 of them were buy orders or buy suggestions, and I believe 1 of them was a sell order. I'm not exactly sure if this latest recommendation is part of those, is the 4th or the 5th. I think it might be the 4th, but either way, Pantera writes in a Medium post that you can check out here by following the link that they have strong conviction that 6,500 on Bitcoin is the low for this bear market, and there's a couple reasons behind that, but the main reason, on top of tax season and kind of new regulation coming out to create this, I guess you could say, yellow brick road for investors to follow. They understand what they should be doing and kind of how they should be going about the space. This fact that there is, in Pantera's eyes, a wall of institutional money that will drive the markets much higher. And when you look at their perspective and kind of who they're talking about, who they're talking to in their day-to-day, it seems, Pantera seems pretty credible. Seems like a rather credible source to be coming into, be posting on their Medium blog, be posting that there are going to be all these institutional investors coming in. Because when, again, they're talking with these people every single day, they're understanding the sentiment, they're understanding when people want to get involved, why people want to get involved, and what kind of has to fall in line in order for these investments to kind of flood the market. So right now, they're expecting, on top of the fact that we might have potentially bottomed out in the market, that we're going to see Bitcoin prices in excess of 20,000 in 12 months, and that is highly likely in their opinion. Again, this is just what Pantera sees in the market. It's no indication, of course, just like Tim Draper's prediction for 250K in 2022 is no indication that Bitcoin is going to get there. These people are just putting, again, just their educated guesses on the table about what they're thinking from a macroeconomic outlook in the space, their, I guess, optimism about the space compared to their pessimism, and again, just what they're seeing develop, and their understanding of the technical aspects and kind of the advantages that Bitcoin offers over current systems. Where are there going to be value adds, and where can it actually disrupt, and what markets is it going to be able to seep into and kind of steal this